part of our Topaz original series of discussions regarding the future of wealth management, today we're going to be digging into client experience, taking as our cue the outcome of some research. Pretty compelling statement to give a focus into client experience. That insight, I guess, begs the question, how can you enhance it, right? Particularly as service providers to private clients, and they're moving to more of a blend of in-person digital engagement model. How can you enhance that client experience in wealth management? To discuss it, hopefully have an animated conversation between myself, Miles Hobart. I'm the CEO of Topaz, which is a wealth management solution, and Edward Turner.
Yeah, hi Miles, thanks for having me today. So my name's Edward. I've been working in finance since now over 10 years. Generally interested in technology and the strategic evolution that wealth management is going through, especially the impact digitization will have. I'm currently a private banker at Dreyfus Bank in Switzerland, focusing on managing the needs of our clients in a holistic manner. The strategic advisor to Topaz, trying to support them in defining their vision, identifying the initial product that they can launch to market, to create that transformation and lead that transformation within wealth management towards a more digitalized world.
Very cool. We're very pleased to have you with us today. When we talk about client experience in the context of wealth management and trusted advisors, ultimately, we want that experience to be driving client satisfaction, right, with the firm that's offering the service. Of that satisfaction is on their side, whether to stay or to go.
Absolutely. So the dream scenario is your clients are your ambassadors, and they'll only do that if they are delighted with your offering across the board. So not only in the advice you provide, but how you provide it and the communication channels you use to do so. And then you'll have satisfied clients who potentially will switch if they find something better, and the unsatisfied ones who will simply decide to go somewhere else. For multiple reasons. That can be because they're not happy with a technological offering. It can be because they're not happy with how the advisors are providing them a truly holistic and specific advice.
How hard is it? How sticky in this space are clients anyway? And I'm just looking, client experience is obviously driving this, but is it getting easier for clients to sort of up tools and move on, do you think?
So I think there are kind of two dimensions to this. Dimension A is the human element of trust, and that remains very strong and very sticky. And the wealthier clients are, the likelier it is that once they've built trust, they don't want to take the risk of having to trust someone else. And dimension B, the side of the element of trust, is obviously how easy is it to switch. And I think switching costs are falling. We're seeing this driven by technology on one side, but also because of regulation, where open banking within payments has kind of paved the way, and I wouldn't be surprised if in the next 5 to 10 years your IBAN will be like your mobile number, and you'll be able to take your IBAN from one custodian to the other, as today you do with your mobile number. That mobile number is yours, and you'll move from Vodafone to Orange or Swisscom, wherever you are, the provider that is the best for you.
And this tendency to switch, well, these stats seem to suggest that it's more pronounced in the younger wealth owners.
Yes, I think there's a generational shift that is ongoing to people that are digital natives and use digital only technologies for everything in their life. And on top of that, I always take the experience of Tinder. The generation that fell in love and got married through Tinder automatically will trust digital offerings far more than those who haven't. They've trusted digital solutions with the most important decision of their life, which is finding the partner. And so they'll do the same when it comes to their finances. People who are older will tend to have had the same person as their strategic advisor for a long period of time. So that human element of trust is very, very strong. That is obviously not the case necessarily with younger generations, who, especially if they're just starting with their banking or family office experiences.
So they need to build up that trust, and while that trust is not, as far as they're concerned, while that trust isn't there, then they are more at risk of moving on potentially.
Correct, exactly. And I think the way trust is built is different as well.
Let's dig into the meat of our discussion, which is really about what can firms do about this. There's a clear statistic that client experience is a major driver of growth of the firm, of success of the firm. There's a problem in the environment around switching and client satisfaction. What does it take to move up that scale? I know, Edward, that you see this journey as multifaceted, right? There's a range of factors that you need to consider.
Yeah, exactly. So the objective here is to try and bring some structure to the conversation to help identify the different factors influencing client experience within wealth management. And broadly, we see kind of these four key dimensions. So dimension A is the human element. So whom are you interacting with on both ends, so on the person receiving the service and the person giving the service. Then the element of trust. So why have you actually decided to work with that person or that institution? And then the advice actually given. And then how is that advice transmitted to a client through communication channels? And we're seeing that all these elements are changing because the human element is increasingly more digital native. The trust element is enabled also through digitalization. The advice given will have to potentially be more frequent because of the frequency of interactions that is driven by digitalization and communication channels.
Well, you're suggesting that there's no point doubling down on any one of these, right, to the exclusion of the others. You need a more holistic approach.
Exactly. And I think every provider will also have to identify its own unique selling proposition and strategic rationale to ensure that those four factors are aligned and the entire client experience fits within that rationale.
So we're going to dig into each of these. Bringing them all together gives a bit of a roadmap or pathway for those laggards to sort of move up the scale and become a customer experience leader. Let's start with trust. It's a really interesting topic because it really brings to play that human nature of the relationship in managing private clients. And we can see from some of these research findings that clients want to be really comfortable around their advisors, at a human level, right? Find them really relatable, be able to open up with them on, particularly, even getting into very kind of personal elements, introducing members of the family.
Within all industries, trust is vital. But I think, especially within wealth management, trust plays an even higher degree of importance. And so if you look at trust, especially within banking and possibly even more after a financial crisis, I think two key elements were, how honest are you and how credible are you? And being credible means, having a sufficient track record, showing that you've got the capabilities needed for the modern world, both from a competencies perspective, but also from a technological perspective. And then the track record will also have an impact on, how long have you been around? And this is why I think, especially in wealth management, those institutions that have been around for long have proven that, from one generation to the next, they've been capable to manage this, complex change. And there comes in the element of security.
When you say security, this is the IT security?
Also, yes, also. But for example, if you remember my financial crisis, people would have not been concerned about the cybersecurity risk of banks. People were mainly concerned, how well are banks capitalized? Mm-hmm. But now, people are raising these questions. What happens if a major stock exchange is hacked? I used to work for SIX, which owns the Swiss Stock Exchange, and the consequences could have been dramatic for the entire financial system. And for a client, that's important because trust and privacy go hand in hand. A bank will have access to a lot of very sensitive data. Mm-hmm. And you want that data to be secure. And I think whom you're working with, it's increasingly difficult to be an expert at everything. You can't be a great investment officer, a great tech company, a great e-banking provider.
Right. So this is bringing in other trusted advisors that you're comfortable with and that you think your client is going to appreciate and find that same level of comfort with. So almost take the pain away from them. You do that once and it works, you do it twice, it works, and then you're just building up. Again, I guess it feeds into that credibility and ultimately the trust, as you're saying. So let's move on from trust to another element of the framework, which is around the individual. We're talking about empathy ultimately. Is that right? We're empathizing with the client, right? And considering each person as an individual.
Exactly. Yeah. Often when we talk about KYC in banking, it's this horrendous compliance process you have to go through, filling in a huge amount of documents. And that is also very, very important. But possibly more important for client experience is actually how well do you know your client? Are you authentically interested in that person? What are their preferences? How do they live their family life? Who's the next generation? What kind of personality do they have? Are these people risk takers or risk averse? The better you know that person, especially the psychological element, the emotional dimension, the easier will it be for you to manage those relationships in a proactive manner.
How do you scale that? And I know we're going to be talking about tools later on, but is there an element of tools here that enable you to come up with this genuine empathy and understanding and knowledge around the client?
I think that has to be central to your entire client journey, from onboarding to managing your client. You have to be able to find a place where that information can be stored, analyzed, and extract ideas in a more systematic manner. Our brains might be capable, might not be capable, but it's impossible to store everything. And it's even more complex to store and analyze. So that's where I think technology will play a huge role. And we're seeing this already in other industries at scale. If you take Spotify, for example, they use the data they have on their clients to target their products better. And the question is not, to target your customers as with digital advertising, that you just take more value out of them. Here, I think, and this is the beauty of wealth management, is the objective is you can use that data on your clients to help them manage their wealth better. So it's a win-win scenario if you manage to do it well.
You're trying to extract the data, obviously, as far as the client allows you access to that data, and with
the consent of their client.
Exactly. With the consent, then you can turn that round and use it as a force to bring value ultimately. I mean, it's interesting, this framework you're talking about, because you can start to see how these elements link together. Because without the trust, the client isn't necessarily going to be willing to really open up, right, and let you know them, understand them, and to let them to give you a bit of the keys to some of their data.
Correct.
And I think also sticking with the identity piece, there's an element of this around proactive and reactive, I think, which leads into client satisfaction as well.
Yeah, absolutely. I think, and this goes back to your introductory slide, where we're talking about delighted, satisfied, and unsatisfied clients. A delighted client will always be managed proactively. A typical example will be, you see an investment opportunity within your network, for example, for an artwork at an auction, and you'll call your client up and say, look, I just want to let you know, I saw this, I thought it could interest you. Let me know if it can be of any advice or support you to finance it. That would be proactive advice. Reactive advice would then be, the client calls and says, I saw this artwork at auction, I'd like to buy it. I've already spoken to 4 banks, let me know what the cost of lending would be. And then you split, satisfied and unsatisfied clients. The satisfied ones are those that receive quality in the response. And the unsatisfied ones are those that either don't receive a response or the quality of the response is very poor.
Let's move on to a pretty meaty part, which is the core advice. There's a lot of different stats and views out here. So we captured one, which is that advice is too generic, right? These people are paying a goodly sum to these institutions to advise them. And linking back to the other elements of the framework about the proactiveness, the trusting that the person is going to be doing the right thing for you, and the empathy of who they are as an individual, it's pretty damning to say, or it's contradictory to then say, well, this advice is too generic. I was asking myself the question earlier, is of the framework advice the biggest client experience success factor?
Obviously, advice is ultimately the kind of a core element of that relationship. It's the what. So what are you providing to your clients? If we look at advice There'll be the quality of advice, there'll be the scope of the advice, and then there'll be your ability, going back to what we were discussing earlier, to partner within an ecosystem with other trusted advisors of your client. That can be, a tax advisor, it can be an advisor for an art collection, it can be a corporate trustee, for example. I wouldn't say, going back to your question, that it's the one that has the biggest impact and can be easily quantified. However, the higher the quality of advice, the higher the value of that relationship. And that's where I think your initial element of, generating a high return on investment on relationships, maximizing shareholder value, that's where it comes from.
One person can't know everything. So there's this value of the ecosystem and bringing in the best parties, the most expert parties, which are the most relevant for this individual and this situation. And again, links back to the trust that this person will be able to find these people for you. But this networking, partnering is a pretty big element of the advice equation then.
Correct. And this is also an evolution we're seeing. 40 years ago within banking, you wanted your information to just be in one place because the fewer people knew your financial data, the better. Nowadays, regulation does not allow you to do that. And B, also you as a client, your life, especially the wealthier you are, your life has become more complex. This means you'll need to onboard all those trusted advisors and make their life as easy as possible to add value to your relationship. In your initial statement, you were talking about generic, specific advice. And this is where I think the evolution has to come from. You as an advisor are not just advising on what you can see of your client, but you also consider all the other dimensions. Quality.
The quality of the advice, yep.
Exactly. Can it be implemented? It's pointless to give people advice that then takes either cost a fortune to implement, or takes a very long period of time to implement, or implementing it has a lot of risks, or the ability within the advice to connect the dots. So not only to think about, the next step, but in a more holistic manner, what is the consequences of that on other factors?
How are you seeing technology influencing the quality of the advice? Are there big strides that we can point to say that, okay, the level of advice has increased by X thanks to this innovation or that innovation? Or is this very early days? Is there a lot of hype in this space?
If you want the advice to be of high quality, you have to know your client well, understand their needs, their core needs, and then meet and ideally exceed their expectations when it comes to delivering the advice. So there, what we were discussing earlier, your ability to have more data, aggregate data, to extract more holistic information, to then enable more specific advice.
So the key part is the aggregation, using systems to aggregate not just the information about the client, which includes obviously their investments, but could be multi-banked. The more holistic, the better, really.
Ultimately, you'll have this advice, your element of advice. What are you telling a client that they should do? But then you want them to understand it, to be able to implement it, and that's where visualization plays a key element. And from paper to digital screen that are more dynamic, more specific, you can also tailor that to the needs of your client. Your client might be able to just create his or her own dashboard with the information they want, instead of just having different bank statements that look in different ways, depending on who your banking provider is or who your portfolio manager is. That's where technology again plays a huge element. And there we are still at the beginnings.
When we talk about mining the data, we're really talking about machine learning, big data, putting together really all the goals, the empathy, the individuality of this person, their situation, their assets, what they're trying to achieve, and then using technology and that the client can see and say, okay, this doesn't look generic, right? This may have been largely influenced by algorithms, right, that you guys are deploying as my advisor, but I'm also assuming that this is being brokered, if you like, by or curated by humans, by trusted advisors. And I'm looking at it and it kind of makes sense, right? It doesn't feel generic anymore. And
just to try and add on to what you mentioned, Miles, I was once listening to a podcast about the guy that invented the ATM. Obviously, people expect, the ATM would replace people working, behind a cashier at a bank. And it has. But those people simply evolved. And now, you go into your bank branch, and instead of just getting cash, you'll discuss a mortgage, or you'll look at insurance possibilities, or your pension, whatever. And I think that the same evolution is going to happen in the high net worth and mass affluent, ultra high net worth space. And that will, benefit the client immensely, but especially it will also benefit the advisor. Because, all those repetitive, mundane tasks, you'll be able to delegate to a machine, which will do it better, more systematically. And then you can connect the dots. You can be specific. You can work with that ecosystem. And I think that's the advisor of the future.
Fantastic. So we said that advice would be quite a large topic, but I think we've had a fair stab at tackling it. And let's move to the final part of the framework. Tying everything we've said before together and considering, right, how does this get messaged to the client, and how does the client collaborate, communicate back? What does that digital channel look like, and how important is it to the overall client experience that we've been talking about? But also, digital is great. Collaborating digitally is, again, there's certain inevitability about that, but there's a very small proportion that is happy to go digital only. So we're talking now about a sort of hybrid model. Digitization continues its sort of relentless advance. The profile of the clients, as we were seeing at the beginning, are becoming more digitally savvy. This is a pretty interesting area, right? And kind of a hot topic, I would imagine, in the industry.
Absolutely. There's a disconnect between what clients expect from their advisors. They want them to be tech savvy. The technology plays a role in the decision-making process. And the people offering services within the wealth management industry, where very few are digitally enabled. And we've seen this, and I think the pandemic has accelerated this, how it has enabled a lot of people to move a lot of their communications to digital-only channels instead of having to travel all over the world for meetings. And that hybrid model has also highlighted just how fragmented those interfaces are. You'll have most banks that will still use some form of e-banking. You'll have most law firms that will use email. You'll have some law firms that will use PDF, some will use Word. You'll have some corporate trustees that have their own digital offering, but most of them will still communicate through emails. Some will share an Excel, some will share their digital banking tool. But at the end of the day, it's all scattered around the place. And everything is a different interface, and it's a different login. And the data is potentially even in a different model. It can't be aggregated and analyzed. And this is kind of a challenge I think advisors are also fighting with.
What we're seeing is that very often an institution will have some kind of a platform that they're using internally. They're tying together they'll have a CRM, they'll have a wealth management system, they'll have maybe other. And maybe that vendor has done a client portal, sort of in quotes, which they've sort of tagged on to the end. When you think about the client, those solutions will never give them the breadth of interaction and data visualization that they're really looking for, right? If you just take a step back and think of it from the client's perspective, they want this aggregated view of everything that they need to see, to process. They need it in a very digestible way, and they need that interaction, that online engagement layer, that maybe with one or multiple advisors. And as you're saying, it's just we're just not seeing it in the market today. And for me, this is really striking, given that these individuals that we're talking about, these high net worth individuals, I mean, in every other aspect of their lives, they expect and they get this sort of premium experience, be it at the service level, the product level, whatever it is. But when it comes to digital, from the services, these hopefully trusted services that have empathy, giving great advice, as we've talked about, they're not seeing it at the moment. And it does seem like there's an extraordinary gap in the market. And over the next couple of years, I'm assuming there's going to be quite a lot of catch up in this space.
Yeah, exactly. And also, The industry has a bit more fragmented with, potentially fewer banks, but a lot of external asset managers, alternative asset managers, private equity funds, your hedge funds, and high net worth individuals will be invested in multiple asset classes. They'll have different needs, different physical domiciles. They might have a property in France, a property in the Swiss Alps, potentially US flat in London, whatever. And it's very difficult for them to have a holistic view over all of that. And beyond it, I think what we see nowadays is that every single party within that ecosystem has tried to kind of implement quick fixes. And some have done it to outsource. So they've just created an e-banking so that they can outsource certain more transactional relationship matters to their clients, such as payments, for example. Some implemented Teams or Zoom to have conversations with their clients. Some still just use email back and forth. I think, if we go back to that element of trust again, it's absurd that you have this fragmentation, because the more fragmented it is, the more scattered around the place the data is. And the higher the risk that someone can actually get to at least one piece of a puzzle. And once you've got one piece of a puzzle, it's easier to reconstruct the rest. There's an element of security and credibility when you're able to demonstrate that you are working with the best partners when it comes to implement your technological solutions, to ultimately manage the clients in that hybrid model.
How important, from your perspective, is the element of design, user experience?
Design is what will differentiate you from others. The nicer it is to use something, the easier it is to use it, the higher the frequency of your interaction. And the more frequent your interaction with your clients, the stronger that element of trust, the higher the value of the advice you can provide. It's kind of this virtuous circle. But design is a USP.
Yeah. Again, tying it back to some of those other elements in the framework of trust in this case. We can see the four elements of this client experience framework. If we just remind ourselves where we came from, we said that the evidence is pretty clear that the client experience is a must-have, right? Getting up from being that laggard to the leader. If you're interested in growing your business, particularly as things continue to evolve with the changes we've been talking about, then you can't just sit by and carry on business as usual, right? Client experience is a major element of growing your business, sustaining your business, retaining your clients. You've identified four key elements as part of your framework that are non-negotiable. They can't be just one in isolation. It's a blend of all four. Could you just summarize maybe some of the key takeaways from each of these framework elements?
So I think this framework is obviously not an absolute solution to all problems related to client experience. The idea is just to provide some structure to enable people to have conversations, and, as you said, then ideally implement solutions that will maximize that client experience to become a leader. And we had those four elements. So the element of the human element, who is providing advice and receiving advice; the element of trust, why are you actually engaging with that person, that institution? Communication channels, how are you doing it? Is it through a digital interface? Is it in a live meeting? Is it a mix of both? And then what are you actually conveying as a message from an advice perspective? To sum it up, the objective is to be as specific as possible, become that strategic partner, and be holistic in your advice. And with holistic, I mean consider all the factors. Specific, I mean not generic advice. And strategic, you have to be there. And again, this ties into that proactiveness. Be there when your client needs you in those life-changing moments. And be their strategic partner in that moment.
Thank you so much for sharing your framework, your thoughts. Hugely enjoyable conversation. And we'll be talking again soon, I'm sure.
I hope so too, Mars. Thanks. I enjoyed it so much. I think we're trying to answer the critical question. We're seeing that there's a huge amount of change going on in the industry. And I think ultimately this will translate in more value for clients and more value also for advisors like myself. We'll be able to focus more on what they actually enjoy and then create more value for their clients.